It's another Saturday and time to highlight the week's activities in the capital market. Welcome to the program. I'm Ini John Mekwa. Well, we begin with activities over the week. The bear dominated in the first three trading sessions in the week. Only Friday's session ended positive at 39,198.75, up 0.21%. The all-share index and market capitalization depreciated by 1.60% and 1.99% to close the week at 39,198.75 and 20.431 trillion naira respectively. The year-to-date returns moderated to minus 2.7%. However, activity levels were mixed as trading volumes declined by 3.8% week on week, while volume traded rose by 41.8% week on week. Notably, profit taking in Stanbic, MTN Nigeria, Guarantee and Dangote Cement drove the weekly losses. The financial services industry, measured by volume, led the activity chart with 1.069 billion shares valued at 9.531 billion naira traded in 10,907 deals, thus contributing 75.34% and 59.88% to the total equity turnover volume and value, respectively. The industrial goods industry followed with 60.762 million shares worth 2.005 billion naira in 1,070 deals. The third place was consumer goods industry with a turnover of 57.023 million shares worth 1.02 billion naira in 2,081 deals. Trading in the top three equities, namely Axis Bank, FBN Holdings PLC and Zenith Bank PLC, measured by volume, accounted for 609.988 million shares worth 6.593 billion naira in 4,080 deals, contributing 43% and 41.42% to the total equity turnover volume and value, respectively. In the sectors, it was broadly positive as the oil and gas, consumer goods and banking indices recorded gains. On the flip side, the insurance and industrial goods indices closed in the red. Well, the week had a total turnover of 1,414 billion shares worth 15.91 billion naira in 18,459 deals that were traded in the week. Well, we move over now to the bond market, where a total of 19,573 units valued at 21.02 million naira were traded this week in 8 deals, with a total of 44,354 units valued at 46.342 million transacted last week in 19 deals. Well, this left the Treasury bond secondary market bearish as investors continue to anticipate further increases in FGN bond yields. Consequently, the average yield expanded by 44 basis points to 12.4%. Across the benchmark curve, the average yield was higher at short plus 38 basis points, mid plus 66 basis points, and long 26 basis points. Segment following sell-offs of the March 2024. Now to the Treasury bills. The Treasury bill secondary market ended the week on the bearish note as market participants remain apprehensive of the persistent system illiquidity. Thus, the average yield across all instruments expanded by 34 basis points to 6.7%. Across the market segment, the average yield increased by 48 basis points to 8.4%. At the OMO segment, the market participants sold off in anticipation of renewed supply. Similarly, the average yield at the NTB segment expanded by 12 basis points to 4.9%. And the OMO auction, the CBN offered instruments worth 20 billion naira with allotments of 4.31 billion naira of the 89-day auction. Well, to some other news now. This week, the NGX PLC placed 11 PLC on full suspension following the approval of its delisting application. The entire share capital of 11 PLC were delisted from the daily official list of the Nigerian Exchange Limited on Friday, the 7th of May 2021. The delisting of the entire issue share capital of 11 PLC followed its shareholders' approval to delist from the exchange. The suspension became necessary to prevent trading in the shares of 11 PLC following the Nigerian Exchange Limited's approval of the company's voluntary delisting application. The suspension is preparatory towards the eventual delisting of the company from the daily official list of the Nigerian Exchange Limited. Well, this week, the Q1 earnings results is almost concluded, but one observation is what might seem like a non-reaction to some of the results. To discuss this with us, we have Mr. Tony Odutola. He's the Deputy Head Investments, ICO Pensions. Is going to help us understand some of the earnings that were released, that have been released so far. Good evening, Mr. Odutola. Thank you so much for sharing your Saturday with us.
Good evening, Ini, and thank you for having me.
Yeah, so we just talked about the delisting of 11 PLC. What can you tell us about that? It's voluntary and it's in preparatory, you know, for some other action. What can you make out of that?
The company Double One PLC has come, initially to say we want to go private. We don't want to be listed on the exchange anymore. And of course, the owners of the company, the members, have come to agree. I've gone to the court, gotten approval to go through that process. And of course, I filed, the notice to the exchange. And the exchange has said that should go on. So of course, the regular process for that to happen is the suspension takes place first. All of that takes, a period. I don't have the exact details before the, eventual delisting of the company. But of course, it's in line with what the owners of the company said they want to achieve.
So a lot of results have been released, but one of the things that seem to come out of that is we're expecting the markets to have, like this week we had 3 negative sessions. Is the market not reacting, not moved by the corporate earnings anymore?
Well, there are a few other related and maybe unrelated issues that would affect investor sentiment. You would realize that we are at a period where interest rates are rising. And what that then tells is that there are probably other attractive returns elsewhere. And so investors will then make judgment calls as to where it's best to, stake their hard-earned funds. So as it is, yes, results are released. It then means that for investors who are looking at it, they don't feel too attracted by those yet. So, until things change, things are still very much fluid at the moment. So until you see those changes, we may continue to see the apathy.
Some of the analysts I spoke to during the week talked about the issue of money supply and the fact that investors may be looking beyond the earnings now to management or corporate action. Some of the banks have had change in their management and things like that.
The changes for several reasons or different reasons as well. For GTB, for instance, it is reshaping for a new phase that they intend to go into, change the structure of the business, evolve into a holdco, have focus on other areas that the bank has risen that will give them, the leverage to be able to compete better going forward. For the likes of First Bank, maybe regulatory induced, maybe not changes to the management now. That's to the board, and I think somewhere down the line we'll probably further discuss that. But the changes are for different reasons, and of course, investors will of course be taking how do I put that now? Comparing those events to other options that they have, and yes, money supply, yes, but then you could always flip assets. If you think that there are better options.
If you think this is a better deal for you.
Which one?
If you think it's a better deal,
then
money supply is not really, that's what you're saying. Okay, all right, so let's look at some of the counters now. For instance, in the oil and gas counter, Seplat recorded an increase in its revenue from 42.4 billion naira to 57.4 billion naira, while Adova, on the other hand, showed profit before tax, but for corresponding Q1 period of 2020, they had a decrease in their revenue. How do we explain this? Does it have to do with what's going on in the global oil markets space?
Okay, so interestingly, the companies you've highlighted don't necessarily operate in the same space. Adova will do regulated products, refined products mainly, and that's capped at the moment in terms of what price you can sell. Triple PRA would speak to that. Of course, we know that the under recovery in that space is absorbed by NNPC, which is a different story altogether. So what Adova does is pretty much buy and sell at a price that is sort of fixed. It's different for Seplat. A rise in crude oil price means that Seplat can sell at the international market at a better price, and of course that should flow through to the profit that the company can make. So we may be comparing apples and oranges in that instance where you're looking at what the two of them has done. So for Seplat right now, it's probably Christmas
and Seplat they've had a lot of good news. They're doing a quarterly dividends payment. They've had an increase in their revenue.
But they've consistently
listing.
They've constantly done that over the years in terms of paying special dividends and stuff like that. I mean, there were things that they had communicated to the market when they came, that this is what we will do. But I think what has happened to Seplat a lot more now, because if you compare last year, there were losses at about this time, which of course speaks to the fact that you are going to have impairments in terms of marking to market the value of the asset that you hold. In their case, oil price was at $30-something per barrel. And that would mean that whatever asset that you carry would have been marked to market, using those valuations. Today we are talking $70. So of course that will flow through into, better results for them.
Okay, so let's go to the financial services now. Zenith Bank had a decline in gross earnings, while profits after and profit before and after tax grew. Access Bank has had a good day all through. When we talk about, and both of them are talking about the issue of acquiring Union Bank.
Okay, so if I start from the last one, I'm not too certain where the acquisition for Union Bank currently sits. I mean, if you speak to any of them, they would rather tell you we are not aware that that is going on. But of course, that's usually the story until you then hear that it's been finalized. I know Union Bank is shopping for suitors in terms of being, for acquisition. But there's a bit of a difference in the business model for Access and that for Zenith. I think you may see a similarity in the income for Access and UBA. I think that of UBA is a bit higher. But what I mean by that is that these institutions are also exposed to other markets aside Nigeria. So it will be interesting to see what contributions those other markets have to, bottom line. Of course, in the local market where the bulk of the income for all of them lies, we've seen rate environment go up. And what that means is that non-interest incomes are, going to be pressured, and that also will mean that it will be sticky at this time. But come the other half of the year, I think that they will pick up.
So before we leave the financial services, First Bank of Nigeria also made the news this week, yes, with the Moody's placing First Bank ratings on review for downgrade following CBN's action. There's been a lot of reaction, to CBN's intervention in their board and all that, and now we are seeing this. Well, so far, from your perspective, what has been the reaction to these Moody's, especially to the financial services industry generally, not just First Bank? Well,
I mean, first off, for the bank, it is negative. It may also cast a bit of aspersion on the industry as a whole. I mean, what could bring about that will be questioning of the oversight function of the CBN itself in terms of forbearances. And I mean, I've heard questions being asked about, would this have been the same if it was another institution that, had those breaches? Will there have been forbearances, or the banks will have been taken over? But I think that we also cannot take our eyes away from the fact that First Bank is probably very, very systematically, important. And so maybe you may not be able to do the, but again, these forbearances are not entirely unknown to the market. We know that capital adequacy ratio had been, pressured. We know that NPLs,
Okay, so I think you should hold your thoughts.
Okay.
It's time for a break now. When we come back, we'll allow you to finish up your thoughts there. We're discussing the corporate earnings for the week on capital market. We'll just take a break. We'll be back to continue. You're welcome back. We're discussing the corporate earnings release for Q1 2021, and we have Mr. Tony Udutola sharing his thoughts. Do you want to finish up your thoughts?
On First Bank.
Yeah.
Yeah. So like I was saying, we knew these issues were there, and the bank, has been improving on those asset quality issues, up until now. The only thing that we were not informed, like in this, expressly, will be the insider dealings and corporate governance breaches that that the CBN has come out to say expressly. Aside that, not entirely something that we do not know about.
Oh, okay.
So I think that with time, all of this will go, especially because the CBN itself has, stamped its authority and gone back to say these terms have got to be followed the way we had agreed that it should. So
Okay,
I think that
right.
we
just before we let you go, the time is really short. Let's just get your views on the consumer goods and the industrial sectors. I mean, you have Nestle, International Breweries, Dangote Cement. What did you observe in this result?
In those ones, I think they've all done pretty well. Returned back into the green. Nestle had a bit of a blip before. Now they're back, and the good old Nestle that we know is there. For the cement industry, you've had all of them report positive growth. I think Dangote was the only one that did about 3 times in terms of growth than the other industry players had done. But I mean, all in all, it's been positive.
So May is here, April is gone. What's your outlook? I
think the equities market precisely, right?
Yes.
I think it will still swing sideways, a bit of losses here and there. If I'll probably stick out my neck, I would say we may see a bit of the BS, holding sway. And that's principally because the fixed income market is, still on the rise, and you definitely will see activities, go in that space.
Unfortunately, we don't have time to discuss that. Thank you so much, Mr. Tony Udutola, the Deputy Head Investment ICO Pensions, for sharing your thoughts with us on capital markets.
Thank you for having me.
Yeah. All right. So now we'll talk about the explainer. For this week, of course, we have Professor Uche Walike, Professor of Capital Market, joining us from our Abuja studio. Good evening, Professor.
Yeah, good evening, Ini.
Yes.
It's my pleasure.
Thank you for being there once again. For this week, we'll be making sense out of the concept of demutualization. Could you explain to us what this concept is all about?
Thank you, Ini. Demutualization, as the name implies, is a term that describes the transition from a mutual member-owned organization that is not for profit to a company limited by shares and a company that is now out to make profits. As you know, stock exchanges traditionally are organized as mutual organizations. That is how they set out. For us in Nigeria, the Nigerian Stock Exchange also began that way. It was incorporated as a company limited by guarantee, as a mutual company. But today, of course, we know the stock exchange has completed the process of demutualization. Let me also say that up until 1993, that was the situation. They were all, mutual member-owned companies. A mutual organization, by the way, is an association of people, who come together to pursue certain interests. In this case, providing a platform, for trading. So the owners are usually, members are usually the, broker dealers. But since 1993, the narrative has changed. When the Stockholm Stock Exchange, based in Sweden, demutualized, converted to a limited liability company limited by shares and for profit making organization. So since then, we have a couple of them that have also demutualized. It may interest you to note that the Association of Stock Exchanges globally is known as the World Federation of Exchanges. This association has about 70 members. And out of the 70 members, nearly 50 of them, that's over two-thirds of them, have demutualized. So it wouldn't be for nothing that these stock exchanges are demutualizing. That's speaking to the benefits. One of the benefits of demutualization that the Nigerian Stock Exchange, now known as the Nigerian Exchange Group, of course, is now a holding company structure with 3 subsidiaries. There is the exchange, the operating arm, which is the Exchange Limited. There is the Nigerian Exchange, the regulatory arm, and the real estate company. Now, this company is now out to reap the benefits associated with demutualization, one of which is raising the brand of the exchange. The profile of the exchange has now improved. The exchange is now in a stronger position to compete with all other exchanges across the world. So that opens up the exchange for a number of alliances, assistance from bigger exchanges, from more sophisticated exchanges. So it has opened the doors for, if you like, for majors. It may also interest you to note that following demutualization, I'm sure you've heard of the Euronext. Euronext was made possible by the coming together of exchanges in Paris, exchanges in Brussels, that's in Belgium, and the exchange in Amsterdam, that's Netherlands. So the 3 of them came together and formed Euronext after demutualization. When the Italian bourse was demutualized in 2007, it also attracted the London Stock Exchange, to partner with the Borsa Italia, for collaboration. So a number of benefits accrue to exchanges that demutualize. The other one too has to do with the corporate governance. As a mutual organization, the corporate governance structure, only catered for the members. Okay, but now the governance structure is expected to cater for all the stakeholders, whether they are members, whether they are investors, whether they are issuers, including the regulators. So we expect better corporate governance now coming from the exchange as a whole. And more importantly, for investors, investors should also expect to see an exchange that is now more efficient, an exchange that now provides better services, and a market that is now liquid, a lot more liquid than it used to be. When we talk about liquidity, usually, even from a theoretical point of view, we identify 5 critical ingredients of liquidity. One, we talk about tightness. So the tightness is ensuring that the spread between the bid and ask price is quite narrow. We also talk about immediacy, which is the speed with which transactions are undertaken. The transaction cycle, for example, of course, for equities market is T plus 3 days. So we expect that with the mutualization, with the opportunities now to invest in infrastructure, we want to see investors are likely to see a shorter transaction cycle from the T plus 3 to possibly T plus 2 or even T plus 1 or even T. Okay. Now, the other 2 has to do with the depth of the market. Depth of the market speaks to the number of buyers and sellers, the number of orders. We expect to see more order flows, in the market following the mutualization. The other also is the breadth. The breadth has to do with the volume of the orders, should be such that the market price is not substantially impacted. And of course, finally, the issue of, ability of the market to adjust to fundamentals, to correct itself. So these are some of the things we expect to see now following, the mutualization of the exchange. So it's a good thing that has happened. I'm pretty sure that investors in the Nigerian, capital market will be better off for it. But there are, of course, concerns that come with demutualization. I must mention.
All right, Prof.
Speaking about the risks.
Prof, I mean, you have given us a whole lot of explanation there. Thank you so much for that. We really have to go. Thank you so much, Prof, for always being there to give us, the nitty-gritty of these concepts. Enjoy the rest of your weekend. Well, that's where we draw the curtains on the program today. Thank you so much for watching, and we hope that demutualization will now become a common word as Prof has educated us on it. Enjoy the rest of your weekend. I'm Ini John Mekwa.